Just what exactly determine the stock price movement? Why is the stock rise quickly sometimes, but fall rapidly in certain period? Why is this happening? What is the theory behind? In this video, I will show you what determine the stock price and the theory of demand and supply. First of all, we will need to understand what is the current stock price showed on website. We can simply Google or go to Yahoo Finance to find out the current price of certain stock. Here is the stock named Apple. What is this $310.33? This $310.33 showed as the current stock price. Or the last transaction occur between seller and buyer. Let's consider the case when the deal is done between buyer and seller. The transaction occur. What they deal in stock market is the stock or the ownership of the company. When this transaction occur, the stock price will be updated as current stock price. Hence, it is the buyer and seller who determine the stock price, but not the value of the company. They cannot determine the value of the company. Let's explain the theory of demand and supply. So what is the meaning of demand? Demand is the quantity of good that consumer are willing to purchase for certain prices. In stock market, bid is known as buy. So what is the meaning of supply? Supply is the amount of resources that are able to provide to marketplace. In stock market, ask is known as sell. What we draw here is the supply and demand curve. So, what is the effect of demand and supply on stock market? For case number 1. There is a fruit stall who sell fruit to people. And there is bunch of customer who want to buy fruit. When there is more buyer, demand will go up. Now the demand is more than supply. And eventually the price will go up as the seller can decide the price. The seller is monopolize the market. I can sell with higher price. This is so-called seller market. So, when demand increase with supply remain the same, the demand curve will shift to right and causes an increase in price. For case number 2. There is more fruit stall selling in the same marketplace. The seller increases, but the number of customer who want to buy remain the same. When there is more seller, supply will go up. Now the supply is higher than demand. And eventually the price will go down as the buyer can decide the price. The buyer is monopolize the market. I want to buy with cheaper price. This is so-called buyer market. So, when supply increase with demand remain the same, the supply curve will shift to downward and causes a decrease in price. This concept apply the same to stock market. In stock market, when there is more buyer than seller, demand is higher than supply and causes the stock price to go up. When there is more seller than buyer, supply is higher than demand and causes the stock price to go down. I hope you understand the theory of demand and supply. Thank you for watching. Don't forget to click the subscribe button and like our video for more videos. Road to invest.